Hello, my Teaserking family. How's everybody today? Okay, I just did football, so now it's time for economics. And as we've talked, a lot of people prefer them broken out. I have a lot of people that are into the economics because this is the only place you can watch it. And so, therefore, they're waiting for the sports to get finished to start getting into the economics. Hello, my Teaserking family. I see the clock just started. So, because a lot of people just want economics or a lot of people just want sports, I've broken the classes out. So now, if you're waiting for economics, now it starts. And if you're wanting the football, we just did that. So anyway, had a big day yesterday in football. Very excited, and now we get to economics. Gold will not start till 7 o'clock tonight. Now, the big thing about gold is so China does the derivatives and Europe does the derivatives, and which is mostly London, and then the U.S. comes in at 10 o'clock and does their derivatives, and that's how the price of gold and silver are set. But being a holiday tomorrow, they will not use they will not use they won't be playing the derivative game tomorrow afternoon at 10 o'clock. So we should see gold really spike. I went to buy some gold yesterday, but my store closed for the weekend for the holiday on Saturday. He's already off Sunday and Monday. I really don't understand when he closes Saturday for the holiday, these holiday weekends, but I'll go buy the gold on Tuesday. Um, anyway, uh, so we will see. Um, So I'm expecting the gold price to go pretty high on Monday because China pushes it up and the U.S. pushes it down, but there won't be a push down because they won't be open. So this will be interesting what happens on Monday, but I expect it up. I think we're looking at 2,600 next week on our way to 3,000. Well, why won't it? Why does it just go up and not down? It does go down because of the derivatives, but keep in mind COMEX has got nothing to do with the free market. It's got nothing to do with the prices. It is strictly derivative control. So they're trying to control the price of the derivatives. Now, watching Trading Places, you saw what Eddie Murphy and Dan Aykroyd did. It started out at 102 and it went up to 142, and then they sold all these derivatives, and everybody was buying, so they all sold their derivatives to Eddie Murphy and Dan Aykroyd. And then they announced the crop report, and there was going to be no damage to oranges. And the price fell because if there's no damage, supply won't be limited. Therefore, the prices should stay low, and it goes all the way down to 29. And then they start buying it, maybe about 30, 35. They start buying what they sold. So they sold at 140-ish, and they bought at 30-ish. So they made a ton of money, but you can sell first and then buy. Well, what happens is in that atmosphere, um, you're selling first, then buying. But is that the real price of orange juice? I mean, why would the price of orange juice be 20, whatever 29 is? That's the problem. It's not. It should be free market. So I price it. See, like this is free market. I price this at the grocery store, and people bid. People will buy it or they won't buy it. If they buy it, I know what the price should be. I try raising the price a little to get the true price of what I can sell it for. But it's done at the market. In this case, the grocery store or the liquor store. But at that store is what people are willing to buy it for. And that's it. So that is the real price because of they supply it, and then the demand of the people to buy it. That's how it should work. That's how all the products at the grocery store pretty much work. Um, but with this inflation, what Coke did is just raise their price to 2.95 for a 2 liter, but nobody wants it. You always see the shelves pretty full of Coke and Pepsi at 2.95. In fact, you'll see, oh, buy one, get the second one half off, or get the second, or buy two and get the third one free, which actually makes the price go down to $2 a bottle. And people go, oh, yeah, $2 a bottle. I'm going to drink 3 bottles. And that's the difference. But in Comac's world, it's got nothing to do with free market. It has nothing to do with free market. It is strictly these derivatives making the price. And that's where we've got them by the balls, is we know that price is bullshit. That price is not anywhere near reality. It's just a derivative price. So there is the supply and demand's coming from people who are playing the COMEX derivative game, but that's not the free market. I think what happened now is that some of these central banks are buying it, which pushes the price up. Maybe they buy it, the big bars at COMEX. Maybe they go to the COMEX and say, I like 1,000 tons of gold. And then they sell. I don't really know who's pushing the price up. I know the US is doing derivatives to keep the price down. But in the free market, I go to my guy and I know he's got the coins and I buy them, but I know that's not affecting the price. I don't understand why. It doesn't make any sense that you wouldn't do it the same way you would do Canadian Club. That if the buyers buy it at this price, that's the price. That's what the market demands. But you don't have market demand in gold. You have derivatives, you have central banks buying it, but you don't have the market. But we're not included in that, right? So if China wants to buy all this gold, or Russia or India or Saudi Arabia, they buy it. And so is that the free market? Well, it is, but then when the derivatives, so then you've got the price going down. But why is the price going down? Nobody's selling it. Nobody's saying I want to buy it cheaper. So therefore, I don't understand that. It doesn't make a lot of sense to me that why the price goes down. Because for that to happen, then we go more to eBay and we go more to this and a Rolex, and if you put the card up, that's a Mahomes card. If you put it up and it goes for $1,000, that's the price. Now, if you do the next auction and only gets 800, price goes down a little bit. So it's based on the auction, but at least that's free market. So we understand what the price is. I noticed that with Marvel cards. I found a box of Marvel cards, 1990, all the X-Men and Wolverine and Spider-Man and all those. I thought it was nothing. And I started looking online, and PSA 10s of these cards are like going for $1,000. Well, I recently looked, and now they're going for like $500. Okay, there's not the demand in the market, pricing these. So that's what's happening. And that's really the point of it. Since there is since the demands drop, fine, but that's not what's going on in gold. The demand isn't dropping to lower the price. The price is strictly done by derivatives. You do your puts and the price goes down. You do your calls and the price goes up. But again, even that's done by the bullion banks, not by the market. Or is the bullion banks the market? I don't buy that. They got their own agenda. So they're lowering price not based on supply and demand. That's why price exists. Price tells you what things should cost. So when you get a Rolex, I show you in my thing, Rolex, you can see 20,000, you can see 100,000, 500,000. That's done by the market. Somebody's paying that much for the Rolex. It's on eBay. And that's what the price is. It's what the market dictate. The people with the money say, I'll pay you this much for it. And unfortunately, that's not what's happening with gold and silver. That's why I think it's so undervalued, is because that the price is derivative based, not market based. Um, so if I go buy 10 ounces of gold, I'm not moving the price. I should be moving the price. If I bought 10 bottles of Canadian Club or 10 bottles of, if the population buys Coca-Cola and it sells out, they're going to raise the price. If it stays on the shelf, the price should lower because they can't sell it. So there's that. Where does the market set? So this is my barbecue one. He's got the ribs at 28 for a slab. And I say, if you go to 45, but all the buyers are at 28. So you got to keep the price where the market is. So therefore, if you price it here, you're not going to sell any. If you price it here, everybody will buy it. So you learn what that number is. Oh, it's 28, maybe 29. Maybe you can force it up to 30. And then, but if you go to 45, and that's the same thing with Toyota. I bought my Toyota for 24. Now the inflation comes, and the guy goes to me, and he's like, I can't sell any cars. I go, what's your price? 35. I go, because your market's 24. If the market's 24 and you're trying to sell for 35, there's no market at 35. Nobody wants to buy the car at 35. So why would anybody, so nobody's going to pay. So how can you just assume there's a market at 35? You've got to understand your market. You must understand. I understand my football, right? What can I sell my picks for that makes sense? And that's the key to it. So there's always a market. It's what the market wants to pay for your item. That's what you're trying to do, right? So how much should I charge for Canadian Club? How much should I charge for? Well, the Mahomes is different. That's an auction. You're on eBay and you put it out and you have a bid, and the auction is, here it is. You bid and we'll have an auction. And then in the auction, it comes up at $1,000. Okay, somebody paid $1,000. That's the point. Now we know different auctions gives different values. Some might get me 500, some might get me 2,000. So it moves a little bit, but you have an idea, because that's what people are willing to pay for your goods. That's what a market is. But when you take it out of the market with COMEX, that's bullshit. You don't have a free market price on it. Why wouldn't you? Don't you want to know what gold's really worth? And they don't. They want to know. They want to just ignore that gold has a value and just keep it down. And that's the problem. So, as I've said on the title, BRICS gold-backed currency, October 22nd, and we're going to see a huge spike in that because it'll be more demand. People will know it's being used, and they'll raise the price because they need it. So if you're joining BRICS, you're one of these 159 countries that wants to join BRICS. We'll use the gold-backed currency. You need gold to play. Well, there's not a lot of gold left. Now, last time we left, where Luke said that the U.S. has some gold-backed currency or some gold or something, which I haven't heard about on YouTube. I will check it out. I was doing that a little yesterday. I went around down the rabbit hole, but we will see if the U.S. has a plan for a gold-backed currency. I haven't heard it. They don't have any gold. The 8,000 tons is not anywhere near what it's not theirs in your Fort Knox. I was watching that yesterday. I love when the first comes. Then I see the new movies, and so I got my Die Hard 3 and 4 back, and a few other movies. So I got those back, so that was good. But that's my point, is when things aren't free market, if you understand how it works, it's free market. So to how football should work. You put a line out and then people bid it up or down, and the line moves as the amount of money's bet. So you're trying to get the better line, the true line of what the public demands. And that's what I excel at, is going, this line's not right. This is a line that the public, but not the real line, should be different. So in the BRICS gold backed currency, so you got right now, I think they're going to add 12. I think there'll be 22 countries in BRICS at this summit, and they need gold. So the demand for gold's higher, which raises the price. Low supply, high demand raises the price. Well, so there's not a lot of gold out there. It's very limited, and most of it's already bought or at the bottom of the ocean somewhere. When the Spanish ship got sunk and all the gold went to the bottom of the ocean, that counts as part of the 260,000 tons, right? No, it's not that much. Maybe it's a ton, but you do have that, and it's basically China with 60,000 tons and Russia with 25, and on and on. India probably 5 to 10, and Saudi Arabia probably 5 to 10, if at least. They don't report it, so you don't know. When you hear Reichart say, "Oh, they have 2,000 tons," he's full of shit. He doesn't have a clue. He's only going by what the central banks say, and how accurate is that? I doubt the central banks are being honest, especially the ones in Russia, China, India, Saudi Arabia. They are not being honest. So you don't really know what they have, but we're not counting central bank gold. We're counting how much gold does China have? 60,000 tons. How much gold does Russia have? Like 25,000. You really don't know the real number, but it's a hell of a lot more than 2,000 tons. But he talks and he doesn't know. I was watching As Good as Gold and Alligator yesterday on the way to Chinese. It was an hour, and they start quoting how good Rick Reichert is. And I'm like, okay, I can't, these guys are idiots. They're having this big conference in Australia, and it's Alligator, which I wouldn't pay 5 cents to see, and then Lynette Zing, I wouldn't pay 2 cents to see, and some other guy I never heard of. I notice how they don't invite me, but it's like $500, or I think it's $400 if you pre-order the ticket, $500 at the gate to hear these idiots talk. It's like, you're going to hear the same thing you just heard on his show. Alligator's going to say the exact same. Well, it's not. He finally did say, he clearly listens. They all listen to me. It's clear, because I'll say things that they don't say, and then all of a sudden I say it, and then they say it. But he made a comment about, well, it's not gold going up, it's the dollar going down. And then he said, oh yeah, but by the way, it is everybody, the demand for the asset is making the price go up. Well, which one is it, Alligator? So at least Alligator and Egon, who are clearly listening to me, have finally figured out that demand for gold raises the price. Like if everybody wanted Canadian Club 12-year, the price would go from 50 to 75 because of the demand. Or if the demand for Mahomes, if this card goes from 1,000 to 2,000, it's not the dollar going down, it's the demand for the card. So in gold's world, it's the demand for the gold by all the central banks and people like us. Now, people like us, I guess we don't count because we only buy ounces and half ounces and 2 ounces here and 5 ounces there. So I guess our buying doesn't count, which doesn't make any sense to me. It should be everything, not just central bank buying, that moves the price. So we know silver's being totally fucked. There's huge demand for it, and yet the price doesn't reflect the demand. That's a big problem, because you think it's not worth anything because it's $30 an ounce. But you got all these solar panel people, India, Saudi Arabia, China, buying it. And they're trying to keep the price down so they can buy it cheaper. That doesn't make any sense. That's not the true supply demand of silver. And there's a higher demand, but the price doesn't show the higher demand. The price is supposed to show the demand for it. In other words, our lovely US dollar, which is worth absolutely nothing, Where's my dollar? So this is worth absolutely nothing. And it doesn't show that. It doesn't really show. This doesn't show a value. It just says a 1. And so the purchasing power is, well, you can buy a gumball for this, but you can't buy anything. You can't buy coffee for $1. Like I said, I was watching Leave It to Beaver, and both Eddie, Beaver and Wally went to the movies, and Ward gave them $1 each for the movie and the popcorn and the pop, and he wanted change. Now you wouldn't care about change. You give your kids $10 and you don't care about the change. But back then, Ward's like, and he said it like 3 times, I need the change back. Where's, make sure I get the change back. So a quarter back then was worth a lot. So God knows what the movie cost, and the movie was probably a quarter, and the popcorn was probably 10 cents, and the pop was probably 10 cents. But that's the value of the dollar. But the value shows. So how much the movie costs is based on people going to the movie, what they'll pay for it. So you're trying to get the product or the service. So if it's legal or accounting or finance or what I do, that what do they get for it? But in products like the grocery store or the movies, it's voted on by the public. You put out a movie, do people go watch it? So you have the movie theater, and then at what point how much do we charge for the movie? And that's based on people coming. If we don't get anybody, we're too expensive, we got to lower our price, or we're going to go out of business because we got to pay for the movie, but nobody wants to see it. And that's what Hollywood's all about with the stars. So they create these stars, Arnold Schwarzenegger or Rocky or whatever. And people go to their movies. So now he can do a movie and a lot of people will go. But that's not really accurate. It's accurate if Rocky does Rocky 3, but when Rocky does Rocky 7, nobody gives a fuck anymore. So that's really what you're trying to understand. You're trying to understand the demand for the product. So it's a movie star, it's a dinner. All right, we open up a restaurant. What do we sell it for? So Gordon Ramsay keeps closing restaurants because nobody can afford them. So he's got to determine, I'm going to sell my steaks at what price? What will the market bear? At the rib place, what will the market bear? And if you can't, Gordon Ramsay's problem, he's too expensive because of the inflation they have there. So I have less money to spend. So you've got to lower your money. That's why prices don't show inflation. It's how much money is printed. Get you to the value of the dollar. That's the whole key to it. How much is the dollar worth? That'll be it. So if all these BRICS countries want the gold-backed currency because they want the gold, and if they try to do it on their own, the U.S. is going to kill them. The wonderful U.S. So, but if they're part of BRICS and Russia and China, the gold will come out. Well, everybody wants gold. Africa's trying to do a gold-backed currency too. Everybody but us. We don't want to do a gold-backed currency because J.P. Morgan wants to keep printing, and for some reason we think we're the reserve currency, which really doesn't mean anything. And then here comes, they're saying, well, China's now the reserve. They do more trade. That doesn't make them the reserve currency. I'm not even understanding what the reserve currency means. It's used most in trade. And so who gives a fuck? Is it backed by gold? If it's not backed by gold, it's not worth anything anyway. It'll go out, not because it's the reserve currency, because you printed too much of it and you've killed the value. And that's really what's happening. So that's what we have with the market, right? The free market. BRICS. Why does everybody want to join BRICS? Because they want gold, because they know gold can't be printed. And I heard the cowboy Halter go, And he finally, so now he's stealing from me some more, as we've talked, where he now says, what did he say? The reason gold, it's no counter party risk. But now what he's saying is he's finally, listening to me going, oh, now I get it, because it can't be printed or inflated. So you inflate the dollars, you print and print and print, and these are worthless. But gold you can't print because you got to have the gold. People will check it and go, no, this isn't gold. So he's finally getting that it's money because it can't be inflated or printed. That's why it's been around for 5,000 years. They never really say that. They just say it's been around for 5,000 years. They never say why these clowns on these other YouTubes, right? They're not really saying. They say gold's been around for but they don't say why. And they don't say it's never been at its real value. Maybe in Rome, but the rest of the places, it's never got it. Now, again, it's priced in dollars, and Alligator says, well, the gold price is set. The gold price isn't set. It's never been set. The gold price is what the market will say it is. We're seeing 2,500, and I say it should be 25,000. Because you go find, there's nothing else you can find. You can't use the fiat currency in any country to offset the gold price, because the gold is far better than any of the printed fiat money. So therefore, we don't really know what the gold price is. So how could you say that the gold price number changes? Sure, well, it was 37 an ounce. Now it's 25.50. I think it changed. But my whole argument is the 25.50 is not its price. That's the COMEX pushing the price down. You don't have free market. If you did, like in eBay, gold would be easily 20,000 an ounce, because a Rolex is 60,000 an ounce. The Mano card's 75,000 an ounce. You don't think gold would get to those things? Because gold's actually money. The Mano and the Rolex are certainly not money. They are just, they're just collectible. They're assets. The Rolex is an asset. The Mano card's an asset. They're both assets. But unlike gold, where it's an asset, it's also money. But it's also an asset. So as the demand goes up, the price goes up. So don't be so naive. Alligator just, maybe he finally got it. I don't think this Holter guy gets it. I think Mark McGuire, I'm not sure. But basically, it's the demand for the asset that makes the price go up is what the market will pay. And since we don't have that, you can't say that the gold never changes value. Well, it might not, but we don't know what the real value is. The real value is not 25.50, that's for sure. So that's where we're at with it. So that's why brics going gold back makes a big deal. The demand for gold will go higher, which should force the price, which should force COMEX out, and then we can get a free market Canadian club or Rolex. What does the market say it's worth, and go from there, not what Eddie Murphy says it's worth with the derivatives. So he comes out at the end, and the orange juice is $29 per whatever. I don't know how you value orange juice, per ton or per orange or whatever. And so that's what he's saying. But at what point does it, how did the price come up? Well, not free market. Some traders doing it. Well, that's not free market. Free market's what's it at the grocery store. What are you selling it for at the grocery store? Well, if there's no problem with supply, didn't get hurt by the cold weather, then you've got a lot of supply. You want to sell it, you lower your price to meet demand. Like every other product, golf clubs, tennis balls, tennis rackets, football, whatever it is, that's the thing. Even like pro football tickets are market. So you can set the price for Green Bay Packers, and there's probably more demand for certain teams than others. The Pittsburgh Steelers, they can charge more because there's so many Steeler fans who just want to see the game. So that's what you look at. You set the price at what the market demands. So how much are these fans willing to pay to come see the game? And you set the price, and do they buy it? If they don't buy it, they don't care. Now, some of it, they don't care what the price is. They just want to go to a Packer game, or they want to go to a Bear game, or they want to go to a Steeler game or a Cowboy game. Doesn't matter what they sell it for, they want to go. Now, there is a top price. If you start putting these tickets at $5,000 a ticket, you ain't going to get anybody there. But $50, now it's $100, now it's $200. Oh, you want to sit at the 50? Well, we'll make the prices higher than in the end zone. But that's free market. So they set the price of the ticket at what somebody's willing to pay for the ticket. That's the market. So you have that in football or sports tickets or movie tickets. But for some reason, we don't in gold and silver and orange juice and all the Comex. And it's all price fixed and rigged. It's really like, what the fuck are they doing? Why are they doing that? It's really, it's kind of insulting, and it's kind of upsetting that you're going to do that with the most popular thing, gold and silver, and then you have the nerve to keep the price of silver down with these stupid derivatives. See, so what you're looking at is nobody has demand for silver, and they're keeping the price down as if somebody was selling it. And that's an insult there. It's not close to what's happening. Nobody is selling their silver, dropping the price. Nobody's saying $30 is too high. I'll pay $28 for it. This is the key problem right here. Nobody's doing that. So that's what you must understand. It's not physical, but here comes a new demand. Here comes BRICS, who needs gold. So all their banks need gold to join BRICS, are buying more and more gold, but they're not buying silver because they just need gold. It's the gold standard. Maybe there'll be a little silver attached to it. I'm not sure. But you are getting demand from the solar panels and electric cars who are needing the silver to make them. So that's one of their bill of materials, so like a recipe. So I'm making steak. Well, what do I need? I need salt, and I need pepper, and I need garlic, and I need, whatever ingredients. Then I need, if I cook it in a frying pan, I need olive oil, and then I'm going to put some butter on it, maybe some parsley. So I'm going to do all that. So I need all those ingredients. Well, that's what a bill of material is in manufacturing. What do we need to build the solar panel? And one of the ingredients is silver. So they got to go to make it. They got to go get silver, and the demand's huge for it. So the price should go up because the demand is, but it's not happening. The other problem is the inflation is making interest rates high. As I've explained, if somebody wants Howard, can I have 20 grand? Sure. But because the dollars are losing value, I'm going to need more than 20 grand from you to go through with this transaction. I'm going to need 25 grand because the money's being inflated, and it's really worth, the money you're going to give me back is worth less than the money I'm making. Sort of like Bobby with his contract, $1 million he gets this year is nothing like the $1 million you got in 2000 or 2001. So that's why you need an interest rate, which is fucking the housing and car markets, because the money is worthless, and they're anticipating the money to be worthless for years, because you can't stop inflation. Once the money's lost its value, the money's lost its value. There's nothing else left. So therefore, you can't stop inflation. They say, oh, we got inflation tamed. How did you do that? The dollar's worth 2 cents. So now it's worth 4 cents. And how did you do that? You can't do that. Once it's worth 2 cents, it's worth 1 cent. It's not worth anything. So if they tell you, oh, inflation's under control, they're just bullshitting you. But to sell a house or a car, since they're more expensive than people have the money for, um, here's a house costs 400,000. Well, nobody has 400,000 in their pocket to buy the house, so they're going to go on a 30-year mortgage or a 15-year mortgage at such a percentage rate, let's say 7%. Okay, so I'm going to loan you 400,000 and you're going to give me payments for 30 years of 400,000 plus 7% each payment. So you end up giving me 600,000 for the 400,000 I gave you. It's worth it to me. And my risk is you won't pay me back. That's why I'm going to charge a high interest rate. And that's why the interest rates are high. And that's why the housing market and the car market are in trouble, because again, with the ribs, the market's here at $28 and you're trying to sell it at 45. Well, the market for the house is, let's say, 400,000. And now you're 400,000 plus the interest, making it worth 700,000. Well, wait a minute. The market's 400. You can't sell houses at 700. There's no market for it. And these people that are buying houses as an investment instead of buying gold, I don't know where they're getting this from. Like in Canada, even here, they're trying to buy $400,000 houses. They're buying houses as an investment. Oh, it'll go up. It won't go up because of the interest rate. Actually, it'll go down. Now, the dollar's worth less, so the house should be worth more because the dollar's worth less. So if you bought your house for $300,000 back 5 years ago, when the dollar was worth a little bit more, not a lot, now the dollar's worth less. So it should take more dollars to buy your house. So your house should go up in value, but it's being countered by the interest rates. So at the end of the day, I can afford 400,000 for a house, but if it's going to cost me 700 with the interest rates, I can't afford a $400,000 house. Maybe it's a $200,000 house that I can afford. Supply demand, the supply of houses, I want to sell it for 400, for 500,000, 400,000, but the demand's not there because you're over market because of the interest rates. Interest rates are because of the inflation. You want to, if you're going to risk 400 grand and this inflation, the money, if you got 400 grand back, it wouldn't be worth the 400 I gave you. It'd only be worth 300 or 200. So by getting the interest rate, then I'm able to get 500,000 to loan you money of the 400,000 for you to buy a house. And that's really what it is. And that's the point. So you've got to understand this. And so what the Fed does is not anything to do with interest rates. It's the inflation that basically controls the interest rate. Because what you're saying is inflation is pure and simple the value of the dollar, and you're making the dollar weaker. However, they keep wanting to say prices, and it's not prices at all. It's the value of the dollar. And they'll call it purchasing power. What will it buy? How many steaks can you buy for $100? And it's a lot less now than you could have. I do that with gold. For 10,000, I was able to buy, I think, 8 ounces of gold at like 1,500 an ounce. Now it's 3, right? 2,600, 3.5 instead of 8. That's how you got to measure the dollar has lost its value. If you just do that, that's because gold really, it does move because of demand, but basically you can see the price going up. You're still buying an ounce of gold, but all of a sudden it's 3. It goes from 8 ounces for 10 grand to 3.5 ounces for 10 grand. Soon it's going to be 3 because it'll be 3,000 an ounce. And again, it's still not anywhere near what the real price of gold and silver are. They're much higher because they've been manipulated down and they're not what the market says. And that's critical. How can you ignore the market? That's the market. That's what the market is. It sets prices. That's the information. So you try to sell Canadian Club at $50. Does it sell? No, we can't sell any bottles. Okay, let's make it 40. We know what our cost is. Our cost is 30. We're going to try to sell it for 50 because that's what Crown Royal sells it for, Doers or Johnny Walker or whatever. We have information of what these should go for. Now it's how many Johnny Walker people will buy Canadian Club, or they won't care. They'll just buy the price and they just like whiskey, or are they loyal to Johnny Walker? And look how Johnny Walker does: red label, blue label, black label, gold label, just to sell it at different prices. Where in the Mahomes card, the difference is there's a regular card of this, and then this 50 count. It's the same card, but there's 50, and this is gold. And that's how they differentiate it. But that's a big difference than just a regular card. But they do try to change colors on the labels to get you to pay more. And I guarantee you it's the same whiskey. Black label, red label, blue label, they're all the same. They just throw a different label on it. That's called marketing. So that's really what you're looking for in gold, that the BRICS gold-backed currency will get a higher price because there's more demand for gold. And they're not interested in having COMEX set their price. Put it this way, if you have the gold, why would you want a cheaper price, right? You want a higher price. We want a higher price because we bought our gold and silver, so we're waiting for it to go up. We don't want it to go down. Yeah, it's a buying opportunity, but we've already bought. Now we're like, okay, go ahead. Now go up. And that's kind of where we're at. And we will see that. I mean, hopefully we'll get that soon. So a free market is where we set the price, and a communistic or socialistic market where the government is the market and not us. But the government cannot possibly run a market. They have no idea what our determination is, what we want to pay for things. So when you hear this Harris woman, what's her name, Kalira? So Kalira Harris wants to she wants price fix. Oh, well, you want tuna? Well, we'll make it $1. Well, wait, it costs StarKist and these other Bumblebee $3, and they sell it for $4.50. You can't price it. The government can't come in and tell the companies what they can sell it for. They know what they can sell. They know what the market will pay. And if they get too priced, if all of a sudden StarKist comes out at $7 for a can, nobody will buy it. So the market regulates itself. We don't need the government involved in it. Government wouldn't know what to sell. Well, we'll sell everything for $2. You won't have anything. That's why you don't have anything on the shelves. Nobody makes it. If I can't make profit, I'm not going to make it, right? If it costs StarKist, $2.50 a can to put the tuna and cut it up and put it in the can. You got a can and paper. You got to seal the can and then ship it, and that cost me $3. So I'm going to sell it for $4.50, and people are fine with it. You can't have the government come in, the communists, and say, well, we're going to sell it for $2 because people need tuna. Well, I'm not going to stay in business on StarKist because my costs are $3. I need to get $4.50 for it, and therefore the government shouldn't be involved. And if StarKist raises their price too much, we don't buy it. We'll buy salmon instead, or we'll buy other products, other fish. There's a lot of fish. We'll buy a salmon or instead of tuna, and that's really the whole point of it. Is you've got to you've got to do that, but the company does it, and the company dances with the market. So Starkist is going, what can we charge the market? What will they pay for it? And so they do these little price increases. They kind of did a 20-cent price increase. So it went from 440 to 470. Okay, a little bit, but okay. Now, once they go over 5, then it's going to be, I'll buy something else. And they know they got you that fish is good for a diet. However, the problem with tuna is the mercury. So you got to be careful with that stuff. But like when I go to the grocery store, my meat store, he's got salmon. It's like $15 a pound. I'm like, fuck you. It's too expensive. I won't buy it until it comes down to $10 on sale. But even with salmon, you can't really store it in the freezer. That's something that you buy and you eat. You can't leave it in your fridge for more than a day or two. It'll go bad. And in the freezer, you can't really freeze fish. So fish is kind of a weird thing. Meat I can put in the freezer, and apparently I can a month later thaw it out and then cook it, and it's fine. I wonder with my frozen vegetables, I got a bunch of frozen vegetables in case we couldn't eat. But I didn't really thaw it. I just took it out of the freezer and then I put it in the frying pan and it tasted like shit. But I wonder, do I need to thaw it out for an hour or two and then spice it up and then cook it if it'll taste better? Because it tastes like shit. But I don't think that's the design of it. But if I'm freezing it, I think I have to do that. But that's how a market works. That's Adam Smith. It's you're gonna make what they want, but you got to make it at a price they're willing to pay for. So there's two functions. Electric cars nobody wants, and the price is ridiculously high. Shows me how weak Elon Musk really is. That he's trying to sell electric cars for 100 grand, and he's got no market. The market for electric cars is here, and he's trying to sell it here, and the market's so low. Not only does nobody want it, but nobody's going to pay 100 grand for it. You got to be out of your mind. So the car catches on fire. You got to find a charging station to charge it every day. My phone's getting to the point I'm charging it, and then the next day it's at 100 or 98, and then a couple hours of use, and now it's down to 40 and 30, and that's what's going to happen in electric cars. So there's a market. There is no market for something he's making. That's called a malinvestment. The shrewd guy knows to make what the market wants and then figures out the pricing of it. What do I sell it for? And the more rare something is, the more you'll pay. So like here's a Mahomes 50 count card. I'll probably pay a couple $100 for it, but the regular Mahomes card, I'd probably pay $2 for it because I understand that if it's limited, it's worth more. The Rolex, why would somebody pay 20,000? So let's look at our eBay. Right, so here's the Jordan rookie card for 500,000. How did you come up with that price? It's a PSA 10. So where did this price come from? Because A, the demand for Jordan, B, because it's a PSA 10, there's very few of them. So if something's very limited, but something's highly demanded, you get a high price. Now the Nolan Ryan, this is not a PSA, this is a PSA 7, I think. But if we go to our Mano card, where do they come up with 60,000? Because it's Mantle and it's a PSA 9 and it's 1965. It's a pretty card. And they did auctions and this is what it got. For other PSA 9s, got 60,000 for this. That's how they come up with it. Unfortunately, the gold price is not done like that at this point. It's spot plus 100, and spot, as we saw, is derivatives. So this is a fake gold price, 26.29. And how did they come up with this Peyton Manning card? 257,000 because it's limited. It's an autograph. It's Peyton Manning, although I thought he was a choker. I don't know how limited it is, but it's a PSA 10. So all this is must have sold for 250,000. How many can they sell at 250,000? Who knows? But that's the point. And then we get the Rolex watch. Where do they get 527,000? Because it's very, very limited. It's highly demanded, even though there's different Rolex watches. There's maybe 20, let's say there's 20 different ones, and they sell for different prices. This one's 527 because that's what it sold for in another auction, or what somebody paid at the jewelry store for it. If I want a new one, I got to go. So if I want this Rolex Daytona, I go to my jewelry store and I go, I want to order one. It's going to take me a year. Now, maybe it's 450,000, but I got to wait a year. Well, I don't want to wait a year. I'm a 2-year-old, right? Most people are 2-year-olds. So they're babies. So they want it now. I want it now. Okay. Well, some guy will sell you his, but there's a premium to it because it's very limited and you can't get it. And if you can't get it, you want it. We talk about that with women and men all the time. Women want what they can't get. So here's 527, and that's exactly how they came up with that price. Others have sold for that, and it's so high because it's so limited. There's probably a lot of diamonds in this, and it's Rolex. This is pre-owned, so this is used, and that's what they're getting for it. It's hot. I'm looking at this maple leaf, 1 ounce, 25.95, and I'm like, it should be over 2,600. But anyway, that's how you set the price. It's somebody does an auction and somebody pays for it. Now, once people see that it's like the mantle card for 60 grand, once people see now, oh, I want that mantle card. It's a PSA 9. It's very limited. It's mint condition. It's been graded. I don't have to worry about it being any problems with it. Somebody auctions it for, say, 50, 55,000. Somebody buys it. Now you've got the price of what somebody bought it for, which sets the price of what it's worth. Now you might have another auction. You might have 10 more auctions where the price goes between 50 and 75,000. We don't know, but that's what we have here. And that's the whole point of it, is how do we come up with a number by a previous auction? So if Joe paid 60,000 for the mantle and I want to buy one, I see, well, it's going for 60. Somebody paid 60 grand for it. So I'm not going to offer 5,000 when I know it's somebody's paid 60. Now, just because he paid 60 doesn't really mean it's worth 60, but it's kind of close to how you get it. And so therefore you put it at 60. Now, if nobody buys it, he could lower the price to, let's say, 55,000 and then see if he gets a buyer. But my guess is it probably sold for 55 and it's mantle, and he probably doesn't want to part with it unless he gets 60. That's probably what's happening. So that's how you really get the market. It's based on what people put it on the market for and what somebody pays for it. So like I say, if eggs are $10 a dozen, people probably won't buy them. Because that's really the question. Why isn't gas $100 a gallon? Because nobody will pay for it. You kind of will because you need to get back and forth, but you'll get a bicycle, or you'll get other things that you'll be able to substitute for the car. or what or you'll very rarely use the car for because the gas is so expensive. So the demand for gas will go way down. So they make more money. I just paid like $3.20 for it last week. So that's really what you have is the price, um, what the market will bear. So I can price things at what the market. So, in my football, it's like, okay, it's $75 per week. Well, the market can bear it. I get buyers. Now, will I get more at 50? Probably, but I feel my service is worth the 75. That's why I did the class at 25. I feel you guys come to the class, you want the picks. So I said, okay, I'll do that. $25 because I don't want to piss the people paying the 75 or the 100 or the $200 for the picks. And basically that's what it is. And we'll see, but I'm not going to go lower than 25. If there's no demand for it, then I won't do it. If there is demand for it and there's a lot of demand for it, I might go to 35. Let's let the market talk. The market wants to make money and they want the picks because my picks are very good and make money, as I went over what I did yesterday. So because I know what I'm doing, I think I can charge more for the picks. Anyway, so here's an 820,000 Rolex, probably the same thing. This is a new one with tags, so this is what the jewelry store sold it for, and this guy bought it for. Or maybe it's let's see who's selling it. Yeah, King's Life Group. I don't know. Local pickup only from New York, New York. So he's not even going to ship it. He's just going to come to New York and buy it. Anyway, so let's see. We have some videos. So we can listen to Egon say exactly what I just said. So let's listen to him.
Americans should be getting ready for a Fed funds rate, which is 2.5% or so, or a little less. I think it's going to be much higher than that. Is that what you're saying? Is that right?
Yes, I mean, that's nothing. That's normalcy. Those are rates that we are not going to see. We're going to see exponentially higher, in my view. Let me repeat what I said about the money printing just in the last 3 years. We're talking about money printing to the extent of, I said 72, I think it's 74% increase in money supply in M1 in the US in the last 3 years. That basically will all translate into inflation. Nobody understands that. The increase in money supply is totally inflationary as a direct result in inflation figures. So we're going to see inflation at massively higher levels. And of course, as I said before, no one can afford that. And not only that, but it's going to last a lot longer than anybody expects.
How American.
So you want to tell me he's not listening to my class? Because he's never said that before. And what do I say every day? It's all about money supply. It's about how much money's out there makes the value drop. That's where I say that they're listening because he never said that before. Alligator never said it. Bill Halter's now coming up with, well, gold's got the value because they can't inflate it. They can't print it. So he never said that before. I say it every day. So, this is the point. All right, so we've got China's economy is about to collapse. We have South Korea economy is about to collapse. So I don't understand people saying how it'll be the yuan will be the new reserve currency, but what they're not getting is it has no value. So I don't know. I was watching Alligator Banks about to unleash hell on earth. He didn't even talk about it. Let's look a little Alligator.
Traditional methods that everyone's been using since before you and I.
Yeah, see, these guys don't have the little boxes. I think the 7-minute mark.
By themselves, I mean the establishment in the form of central banks and all the rest of it. They've got themselves into this hole over a long period of time, and they're trying to wriggle their way out of it without actually understanding classical economics, if you like, which would inform them.
Austria.
You know, look, hands off, just let the economy sort itself out. That has all changed. That's where the whole thing went wrong. And I think we are rapidly approaching an end point. So Powell is the man who's now got the...
So classical economics is Austrian economics. Why he's afraid to say Austrian, I don't know, but he said classical. But it's the same exact thing, classical or Austrian. I just say Austrian. If I say classical, I'm sure that's going to confuse a lot of people. But that's free market. That's what we talk about every day.
Responsibility in his shoulders for dealing with a failed policy. And it's going to take, I mean, I think Greg's absolutely right in the sense that, yeah, we're facing a new problem here because there is no way that the inflation problem is over. If you understand the origin of inflation, in other words, the loss of purchasing power of a currency, it's basically a combination of government deficits and consumer spending financed by borrowing. And if
I don't know where he's getting that. It's got nothing to do with that. This is where I'm losing confidence in Alligator. What the fuck did he just say? It's about printing the money. That's all it is. You've printed too much money. It's worthless. End of story. If you print 1 million of these, guess what their value is? 0. But when you put it out of 50, it has a value. And that's all it is. So I don't know what he's talking about. How he derives at his thing is just bullshit. He's totally clueless.
Put those things together, then you're going to inflate prices, which is actually, you know, the same thing as saying the purchasing power of the currency goes down. That process is not over. I mean, I was looking at the savings rate. I've sent out a thing on my Substack.
Well, I mean, it's not the same thing. It's the dollar losing value going to 0, where it's at 1 cent right now. How is that? That's what the inflation is. It's the value of the dollar having nothing. It's not really prices going up because you can't always raise prices, as we talked. You can't make the ribs $45. You can't make the Camry $35,000. Nobody's going to buy it. So you can't just raise prices because the value of the dollar is worthless because people don't get more dollars. So you make 100 grand. Now the 100 grand is not worth what it used to. And your bills have gone up. So you can buy less than what you could have, but they can't raise prices because nobody can afford it now, right? You have less money because everything else costs more. So you can't raise prices always.
This morning, which included a chart on the US savings rate. That's now negative. So that's very inflationary.
No,
On
it
top
isn't.
of that, you've got a budget deficit.
How the fuck is that inflationary? It's got nothing to do with it. Let's go back to reality. You printed too much money. It's worthless. That's it. It's got nothing to do with savings. Got nothing to do with the government and this and that and the other. You printed too much money. It's worthless. That's it. Don't make it. Don't fill in your own crap here, Alligator. This is what I just cringe. I don't understand who this guy is now because he wouldn't say stupid things like that. Now, what he says makes 0 sense.
Running at well over $2 trillion. I mean, I think the outturn this year could well be over $2.5 trillion. And I'm talking about this year ends in September. We've only got another month or so. And after that, it's going to be even more. And if we are on the cusp, if you like, of a recession, then what do governments do? I mean, according to the macroeconomic and Keynesian playbook, what they do is basically increase the deficit to try and support the economy.
Yeah.
And so, we start with debt to GDP at a record level, higher than it was in the wake of World War II. Now, 130%. It's going to go up from there. So, this is a real problem. And I think where this will fail is the foreigners are now, going cool on US debt, on buying US dollars and US debt. And we saw this with the trade-weighted dollar beginning to fall quite sharply, actually, in recent days. So how are they going to fund it when they rely on foreigners to basically pay the government's bills? I mean, the answer is it's not going to happen without interest rates rising. So, I can see the dollar's trade weighted falling by a good 10%. And on that basis, Powell then has another problem. He's not going to be able to fund the deficit. So where that leaves either Trump, who is a spendthrift, or Kamala Harris, who basically is a lawyer and doesn't understand any economics, as shown by her recent statement, where's that going to leave them? Greg's right. We are on the verge of an unholy mess. And I think it's actually the end of the fiat currency system. We're beginning to see the beginning of the end of the fiat currency system. That's roughly where we are. End of the fiat currency system. That's roughly where we are.
It's interesting because it's more than
I
interesting.
mean, obviously, we're going under the gold standard. That's what BRICS is doing, and everybody will join on the gold standard, and nobody will want the fiat money. That's why BRICS is doing the gold standard, because they realize the money's worthless. And they know what happens when the money's worthless. Nobody wants it. Everything collapses. The only savior is gold. So BRICS understands it, and all 159 other countries understand that I want to be on gold and not. And anytime they've tried to do that, they've gotten shot by the U.S. because the U.S. understands it. So I'm curious where Luke's seeing this gold standard for the U.S. I'll keep looking, but we will see.
I watched a very quick segment the other day with Donald Trump being interviewed. It only went for a minute and a half, 2 minutes. But the chap that was interviewing him said, look, Mr. Trump, if you win the election and you become the next president of the United States of America, are we just going to see more of the same? I mean, we've got debt levels spiraling out of control, inflation. What can you do about it? He said, the one big difference between what we're seeing now and what I'm going to do is, he said, I'm going to make sure we have an enormous economic growth. He said, it's just going to be phenomenal. You know what Donald Trump's like. And I thought to myself, yeah, but this is common. This is a common response.
Where does the money come from?
But where is the money going to come from? You don't have too many tools in the toolbox. You can come in the form of taxation, direct and indirect taxation, and of course, cheap money. Just keep printing more of the stuff. But no one ever seems to ask these questions. So even Donald Trump isn't ever cornered where he's got to answer those questions. And I find it alarming that mainstream media don't make more reference to this and hone in on it, because they would have no positive answer. It's all right talking about increased growth, massive growth, but how is it going to be achieved? If there is another way, can you please explain it to me? But I don't think.
Well, you need the gold standard for growth. It's the best time in the world was everybody from 1879 to 1913. The whole world was on the gold standard, and there was a 5% increase in productivity, the highest ever in life. So you need gold to do that, and you need he's probably going to do tax cuts to stimulate the economy, because the more money we have, the better the economy is than the government spending the money. You need to reduce a lot of the government spend, which they, well, it's ridiculous how big the government is. It costs money. Where do you get the money from? So just to fund the government, which is not part of the market, we don't need the government for half the things they do, right? Just keep my taxes low. We don't need the government for that. Free trade, we just need the government to stay out of the way. The Constitution, we need to follow it. So we need to enforce the constitutional laws. So we need, judges who are honest, and we need gold. So you can cut 9/10 of the government out. That's not needed. Just let the market run itself. We don't need the government interfering. That's the biggest problem. And then you just cut taxes, gives us more control of the money. We'll spend it much better than the government. But I don't know.
There is. No, there isn't, Daryl. You're right. And his economic policies are completely balmy. He reckons that if he can stop Chinese imports into America, then he can rebuild the manufacturing base in America. Now, this, if you like, I'm sure that every businessman he meets says, you've got to make America great again. We want to repatriate our manufacturing. But, this overlooks one basic factor, and that is that the reason Americans buy Chinese goods is because they prefer them. I mean, there are various things that go into preference for goods. I mean, price is one thing. Things like reliability, quality, all these factors come together in the consumer's mind when he makes his choice, what he's going to buy.
So again, this is the market deciding what they want. This is the problem with tariffs and not having free trade and not allowing the market to dictate. So if we want to buy something from China, it's because it's cheaper and good quality than U.S. You don't buy U.S. just to buy U.S. U.S. needs to compete with China. So at the end of the day, we make the decision. And that's why if you do the tariffs, you're killing our decision. Well, we want Chinese goods, but now you've made them, 50% higher because you're tariffing them. You're fucking us over. You think, well, if we make it expensive, then America will grow because the Chinese will be too expensive. So in other words, what they're saying is, we can sell product A for $30. China sells it for $20. So everybody buys the China. But now they're if we put the tariffs, what we're trying to do is make the Chinese goods cost $35, and ours will be $30, and everybody will buy ours. That'll grow the economy. Yeah, but what he's saying is we want China at 20 because that's what the market prefer, not the 35. But you can't force China to be more expensive. That's a bad thing. That's not what you want. So this is why it's always free market's the best. We determine everything. If you just leave it in our hands, we will run everything. We don't need the government sticking their tooth. That's laissez-faire economics. Just get the fucking government the hell out, right? That's laissez-faire.
No, for American business to start manufacturing to compete with China, this is obviously a very big ask. Donald Trump's answer to this is tariffs. We'll raise tariffs. And not only will that stop Chinese imports, but also it means that we will get income, which will allow us to cut taxes.
Right. Oh, yeah, sure.
But if he does that, basically, what happens is that he just drives up the prices because, prices coming in, motor cars are a very good example. The Chinese are way ahead of everybody else in terms of their production of motor cars. And, I think they're talking about 100% tariffs on imports. This is basically denying U.S. consumers valuable goods.
Yes.
The idea that this is a tax against
It's not denying, it's pushing you away from China into the US goods. It's not that the goods will still be there, but the price of the China good will be more expensive. And if you're going to go to the store and base your decisions on price and quality also, if you're going to base your decision on that, you'll buy US goods. But the problem is the US. So if I'm selling, whatever at $50 and China's at 40, and now you've raised tariffs, so China's now at 55, guess what happens to our price? Goes up to 55. They don't have an incentive to lower their price because now their competition is higher. So they raise prices. So it's a lose-lose for the customer. All right, a little more, and then
Chinese.
we'll call it a
It's
day.
actually fraud. It's a tax on the people.
Not a tax.
The whole situation is just complete nonsense. And this is a man
Or rubbish.
who, is campaigning to become the next president.
Yeah.
And don't start me on Kamala Harris.
Well, there are no other options. I mean, that's it.
George Soros.
What Greg Marino is talking about. I mean, they are the two options, and I really can't see the world moving forward with either of those two at the helm.
And the thing that I don't understand in this particular thing about tariffs is that after the depression of the United States, they tried tariffs. It didn't work. So
It's worse than that.
Is it going to work now as it didn't work before?
Yeah, but it's worse than that, Brian, because the Smoot-Hawley Tariff Act was signed into law by President Hoover in, I think it was May 1930.
29.
And basically, it was, when it was proposed, it was at that point that Wall Street started collapsing. And when it was eventually signed into signed into law by Hoover, it was at that point that the stock market really started going down, and it was unremitting. It just fell and fell and fell between May, June 1930. And
the market crashed in 1929 in October, and it didn't fall and fall. It was 295, and it went down to 25. So I don't know, fall. It did fall, but it was because what did the tariffs do? They raised prices. You raise prices, you hurt, and that's what happens. So the values of the company drop because it costs too much. So the costs went up, their profits went down, and people started needing money, so they sold their stocks. See, that's the same thing that's going to happen here. Everybody's going to need money. They're going to dump their stocks, and then they're going to get out of the banks, and that's why the collapses happen. Hey, Mike. Do I not seem live? This is live. It should say live on it. Yeah, it says live over here. For me, I can see live 117:52. But why would you think this is a pre-recording? No, that's if you just do a video. So you have a choice. When you do this, you click on live or video. So I could do a video and then upload it. I prefer to do live so I can read your comment and go and answer you. That's why I do them live. Do you have any questions, or is there? This is live. All my football is live. Everything's live here. Anyway, so as the costs go up, the companies are less profitable, and then people needed money. Really, 1929 it crashed because of the Smoot-Hawley Tariff Act, which made it more expensive for the tariffs made the prices more expensive, and it fucked the farmers because the farmers needed to, they sell a lot internationally, but with the tariff, they made it more expensive. And when they made it more expensive, it hurt the companies, then people needed money. The banks started crashing because the farmers couldn't pay back the loans to the bank. So the way it works is you want to sell wheat. and you go to the bank to get a loan. Said, look, I don't have it now. I'm going to plant my wheat. So I need, $10,000 back in the day in the 1920s. And then I'll pay you back 15,000. I'll make money on it and then I'll pay you back. The banks do it every year. So they're like, fine. And so the banks lent them the money. These idiots did the tariffs, which made the cost go higher. So when Europe wanted to buy our wheat, it was more expensive. They didn't buy as much. The farmers got fucked. They didn't make as much, and then they couldn't pay the banks back. And the banks got fucked because then they couldn't get paid back. And you had all these bank closures, which you're about to have now. And that's then went to the stock market crashing. But it was mostly people needing money sold their stocks because everybody and their mother was in the stocks and they were all in it on derivatives. So they would put on leverage. So they'd put 10% down and buy, and then go, they'd buy 100 shares, but they'd only pay for 10. And then the leverage paid the other 90. So when it started to go down, everybody lost their money because they mostly got made off into believing the stocks never go down, and I can do margin or leverage where I'm gonna borrow money. I really want 100 shares, but I can borrow and make it 1,000. But if it goes down, I got to pay for it, and of course it goes down, and that's what happened. That's the Depression, all by the Smoot-Hawley Tariff Act in 1929, not 1930. The market crashed in 29. So what he's saying is that, wait, the Smoot-Hawley Tariff Act was signed in 1930. The market crashed in 29. By 1930, it was already back. So it went from 295 to 25, and then it was back to 275 by March of 2030. So not sure what he's talking about. Again, I'm thinking alligator's losing his mind here. All right. 5 more minutes, and then I'm off to the pool.
1932. And, banks were going bust and all the rest of it. I mean, this idea that tariffs, can rescue you from whatever is a load of nonsense.
It's rubbish.
If you go way back, then tariffs were a source of income for governments. I mean, that's, you probably read all the novels about Cornish smugglers and all the rest of it. Well, that was because there were tariffs. And certainly it meant that, government spending, if you like, was contained by that source of income. But we're talking about pre-income tax days. I mean, this was a situation before Pitt the Younger introduced income tax. So, but that's not the situation now. We have huge, great taxes, and to put tariffs on top of that is not really a very clever thing. The only way in which the situation can be rescued is by massive cuts in government spending.
Or gold.
And I don't think anybody's going to get a mandate to do that. So, we're in this.
Gold would save the day, but nobody believes in gold except for BRICS, which is why they'll be running the world, because they have gold, and you can't fuck the money with gold. We're fucking the money, and then it's government spending, which they print more money, and the more money you print, the less it's worth. We're at 1.5 cents on our way to it being worthless. And when BRICS comes out in October, that'll be it, because you have a choice of the dollar or the gold. Well, everybody's going to take gold. I don't know. I don't believe the U.S. has any gold, so this would be very interesting if all of a sudden they pull it out of their ass and say, oh, yeah, we have 1,000 tons or whatever, and we'll go on to a gold-backed system. What are you waiting for? You could easily have gold-backed currency now and make the gold price $10,000 and pay off your debt. So what the fuck you talking? Or you're not? You're just going to collapse the dollar and the debt's in dollars, so you don't own it anymore? I mean, that sounds like what they're probably going to do, but they can't pay it back.
Final hope, really.
Yeah, wow.
Yeah.
Okay, look, got another question. It seems about every 100 years we have a change of power so far as countries holding let's call it reserve currency status.
The 100 years doesn't mean anything.
educated by these economists out there to think that, oh, the gold standard, you got no growth. That's a lot of hogwash, ladies and gentlemen. It's just a lot of hogwash. Question, and it's a little bit based on what I've just said. So it has been said that the United States is increasing its government debt by $1 trillion every 100 days, right? The debt at the moment is government debt is 35.26 trillion. And so by these calculations, the debt will be over 36.3 trillion by Christmas this year. Alistair, what effect will this have on the gold price? And we'll talk fiat currency gold price at the moment. What effect will this extra $1 trillion every 100 days have an effect on the price of gold or the value of gold?
Yeah. Well, the value of the gold broadly remains the same. It's the value of the paper currency which is declining. And I think that's the important thing. Yeah. Having said that, when you get a flood of people going out of the paper currency into gold, then the value of gold in terms of its purchasing power, measured against particularly commodities, for example, that will tend to rise. So pure supply and demand. And I think, this is something which I don't think has been fully appreciated in bullion markets. If you look at China, household savings run at around about 35% of GDP. That's $6 trillion. $6 trillion every year, no longer going into property, not really attracted into the stock market. It's just going into deposits on banks' balance sheets. Now, banks also, by law in China, have to, or regulation probably rather than law, have to offer gold accounts. This comes back to the whole of the gold thing. The Chinese government are preparing their population for this. And these gold accounts, basically, if you've got 500 yuan, maybe 600 yuan, you can open a gold account. So less than $100 equivalent, you open a gold account, and that account is denominated in gold. It's basically an unallocated account, as I see it. But what it does is it leaves the liability with the bank with a gold liability. So what does it do? It has to go out and buy gold in the market in order to have it. The idea that you can back these customer accounts with paper gold, is actually severely limited. And this is what's now happening. This is the drain of gold coming out of our markets is actually increasing. One of the things I monitor.
So what that means is, again, demand for gold, which again should raise the gold price, all that China's doing. So that's why COMEX is such bullshit, because they're not measuring the demand. They're just measuring the derivatives. And then you get silver not being used in this. This is just they're buying gold. Well, eventually they won't be able to afford it. And eventually you then go ahead and start buying silver because it's so cheap. So as gold goes up, and for those who think it's a percentage price, silver goes up faster, gold's going up pretty fast and silver's not moving. So the percentage of gold is far exceeding the percentage of silver, only when gold gets so high that they can't get any more of it, because it's very limited. So when you can't get any more of it, then you turn to silver, because silver is money, and that's the out. That's why we buy silver. What we've been doing for the last 3 years, we've been buying gold and silver, and we're just waiting. We're 5 steps ahead of the game, as I like to call it, the Titanic. The Titanic's hit the iceberg, the water's coming in, and we walk to the lifeboat, which is gold, saying, well, we know the boat's going to sink, so let's get in the lifeboat now. Why wait till the end? That's what we've done. We see what's happening. They printed the money to death. Here comes BRICS with gold-backed currencies. So we've been buying gold cheap and then waiting for the price to go up. And that's all we're doing. So we don't really want to, we want to buy a little bit more. You want to buy as much as you can to get out of the dollar. The dollar is going to zero. That's the most obvious. This is the game. Get out of this. And then it's buy the gold and silver. So we're buying, and then, here goes the gold price. And then here goes the silver price, because that's the only real money, and that's what you're trying to do. So with that, I am going to bid an hour and a half of this, an hour and a half of football. I'm going to go hit the pool because it closes 4:30. It's Labor Day weekend, so have a nice weekend, those of you in America. I know Pat's in Singapore. Have a nice day, Pat. And that's where we're at. Luke, enjoy. Ball games, golf courses. Go enjoy. And I got to figure out what to do for Labor Day. But anyway, that's, go enjoy. We got football tonight, LSU, USC. We've got football pros on Thursday and start of the NFL. So we're excited about that. Picks will be posted tomorrow. You'll be able to get them Tuesday. So Tuesday morning, the picks will be available to get. Had a great yesterday, Georgia under, TCU, the Georgia Tech, the under in the Notre Dame game, the over in the Alabama game. It was a beautiful day. Miami of Ohio and my favorite, Miami of Ohio and Eastern Michigan over UMass. I love those games. So we have homework to do, which we're going to get to, and basically update my stats and update my notes, and we'll go from there. All right, everybody. Well, have a good Labor Day. And again, go to www.teaserking.com and you go to the homepage. You get my email if you need to talk to me. I do have I'm going to do a class on tomorrow for somebody in California. Wants to learn how to bet football, how to pick it, how did you choose those games and everything. So we've set up a one-on-one, $25. I'll be happy to do that with you if you want. I've got the football classes on YouTube where it's just like this, where I talk and you can comment and ask about certain games, and I can give you all that, but I can't give it to you here. So that's the kind of change. Anyway, have a good day and happy Labor Day weekend. Enjoy. All right. www.teaserking.com. Gold should go up a lot Monday because the U.S. won't be able to do their put derivatives down to lower the price. So it should just go up without the down, but it'll be probably reversed on Tuesday, but we can enjoy. All right. Yeah, we're ready for 2,600 and we're ready for 3,000. Here we go. All right. Take care, everybody. Have a good day.